Hi everyone, welcome to the presentation of the IPO page for Virgin Atlantic Group. The initial public offering is a process that helps a company going public. Here we can see the key steps of the IPO process. Firstly, an underwriter team needs to be chosen for IPO, which in this case is us. After the due diligence is completed, we will market the shares to estimate the demand, then finalize the initial offer price and the number of shares being issued, and release them to the public market. Following the IPO, it will be the stabilization, which is also known as a quiet period, when underwriters can trade and influence pricing. Once out of the quiet period, the new stocks will be fully put into the transaction to market competition. The aviation industry is undoubtedly one of the industries hardest hit by the global pandemic since 2019. However, it is forecasted by the International Air Transport Association that the profit of the Europe aviation industry will reach $621 million. The financial ratios of these comparable companies represented on the screen are also showing a positive trend. With these figures, it can be estimated that the restoration of the profit side will potentially bring Virgin Atlantic a decent performance, both in terms of revenue and in the capital market approximately in 2023 after listing. To estimate the firm's value, the DCF model has been applied. Several key points from the annual report 2021 need to be emphasized here. Initially, the firm is expected to return to the pre-pandemic level in 2024. Also, the operating cost and the capex has been reduced to buffer against loss caused by the pandemic. In this case, we estimate high revenue growth rates after 2022. Secondly, the company is net debt is negative because they were leasing aircraft, engines, and property. Finally, an investment of £400 million has been completed by the year end 2021. Which has been added into the equity value. Take into account some estimations for computing the work. The pre-IPO equity value of the firm is £2,512 million. Since the firm has 100 million ordinary shares and 50k preference shares outstanding, the estimated value per share will be £25.12.
Well, let's talk about the pricing strategy. About a month of equity to be raised, because the assets liability ratio of Virgin Atlantic has reached 18.7% in 2021. Although liability can provide a texture and improve the overall value of the company, it says liability poses the risk of bankruptcy. Hence, we suggest that the target asset liability ratio is 16%, which is rarely begun for the aviation industry with heavy assets. In order to reach the target capital structure, 1101.9 million equity needs to be raised. Right. With different expected discount rates, the price range of an IPO price to issue is from 17.59 to 22.61 on list. However, with the consideration of aviation industrial's performance in capital market is relatively weak, we suppose that the price per share to issue is at 70% of the actual value per share. Therefore, we decide the final price per share to issue is 17.59 and the amount of value shares is 62.65 million. In this process, we will charge 10% of the rise funds as commission, which will be £110.80 million. After the IPO, the equity value of Virgin Atlantic Group will reach £14.29 million. And the actual value of each share should reach 21.54 with a rate of return of 22.46%.
Investors, they will be interested in expected return before they purchase the share. So here we're using CAPEX model to estimate the stock's return rate in the long-term perspective. The risk-free rate is the 10-year treasury rate of 3.51%, and we're using the S&P 500 index average rate of return of 10.67% to calculate the market risk premium of 7.17%. And the beta of 1.34 is estimated by the comparable company's beta. The estimated expected return of equity is therefore 13.04% based on the computation. Another method to estimate is the APT model, considers systematic and specific risk in asset pricing. However, the independents need to be considered are quite dynamic recently, so we are not applying the APT model here.
Summary. The IPO scale is 1101.8 million equity is suggested to be raised, and the IPO price per share suggested is £17.59, and the amount of value shares is 62.65 million. The target capital structure after IPO is 16% of debt and 40% of equity. And finally, the CAPEX model suggested the expected rate of return on equity would be 30.04%.
Thank you for listening.